Right, legends, welcome to the break in market structure video. Okay, so while I was planning this, I had different scenarios marked out. Some the easiest ways of looking at breaks in market structure to the more complicated ways. And then I thought, you know what, fuck putting too much together. What I want to do is focus on the most basic thing of seeing a break in market structure. Okay, and from there, if everybody understands it, because there's no point doing more advanced things when you don't understand the basic. Okay, and 90% of my entries, okay, or looking for breaks in market structure are it's the same thing really. It's just certain patterns don't look 100% identical to a template. So for example, I'm going to mark out a scenario, okay, or I'm going to mark out how what it should look like, okay, and then we take it from there. So we've got, say that's a low here, and it's going to be mainly focused on ranges and dealing ranges, okay, and then that's to say it's not high highs and high lows, but mainly ranges. So this is the most basic template, okay, where say this is a key high time from support level here, okay, you've got this sort of price action there, okay, then there. So what's this? That's a deviation into a key level, okay, then back above it. When it gets back above it, reclaims that, then we're going for higher prices, okay. So the entry would be there, okay, the risk would be there depending on the scenario, okay. Then you get more advanced ones where it looks a bit different. For example, you get something like this, and then back below it, and it's not really looking smooth, okay. But we'll get to that later on. For now, let's go focus on the main one, which I showed the first time, okay. So the main aim is to identify what are we identifying really. Okay, it's not just the pattern alone. We're identifying the reason behind it. The reason behind it is we're finding out, okay, when do I enter? When do I have the confidence to enter? Where am I wrong? Okay, targets we can deal with later on. That's a separate issue. Okay, but we'll mention some. But where am I wrong? That's finding invalidation levels, because once we've got the invalidation level, then we can enter, okay, and we use these ranges and dealing ranges, okay, to help us identify that. Now a lot of people, they're used to what's the breaking market structure, where it comes into there, and that's the most common thing, okay, everybody's used to higher highs and higher lows, okay, there. But often you get something like this there, and then back up again. What do you do in those situations? Okay, so if you can master the basic of it, naturally you will progress. With enough examples, you'll progress and see what it looks like for more advanced type of patterns, or maybe that's not the right word, more complicated looking structures. Okay, so let's start with this right now. We're going to be focusing on this area here, okay, for our first example. Okay, now let's identify. First of all, I like to for market to come off a key level. So let's mark that out. What's that key level in this situation? In this situation, okay, we've got this marked out. Our key level is, okay, this pivot here. Okay, we'll be speaking about for weeks. So I'm going to use examples we've been looking at before. And this may be repetitive because we've been over these examples in live sessions before, but in this video, what I want to do is just collate examples together, okay? It's not going to be shitloads of examples. I'll show you the blueprint. It's up to you to go out there and practice it and see it for yourself. When you do that, you're training your mind to see it, okay? That's the aim. Train your mind to see this. And if it's something that resonates with you, happy days. If it doesn't, it doesn't. Okay, it's not for everybody. People see things differently. But we've identifying here, this was the down move, okay? We're speaking about this for ages. Down move, push the market up. We've got resistance, 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 break of support, okay? And then if I drag that along, okay? Drag that along, it's come back into this is the example we're looking for down here. So just that, I'm only doing that just to mark out, okay, we're into a key high time from level. Now, let's break it down further. Okay, what is exactly what we're looking for? And this is what it comes down to, narrowing it down so I can get rid of this for now. Okay, so we're in that key high time from level, day level. What also do we have? Okay, we've got this here. Okay, we're identifying the range we're in. So before the entry, okay, let's say price is down here for now. It's come to a key high time from level, because it's a key high time support, we're looking for longs. So let's see, where is market trapped within? Okay, well, market's trapped within this low here because it took out that low, and this high here. What proves it is this deviation there. What proves it is that run there and below it, so it's trapped between or within this grey box here. Okay, now how do we enter? Well, let's narrow it down further. We'll go to the 5 minute, and this is an example I've used before if you've been in the live session. So if it's repetitive, well, even better, because it's just ingrains in further in your head. Okay, we've identified, we've taken out this key low. Now what we're looking for is that breaking market structure, or market, another way of saying interpreting is market telling you it wants to move higher or in the direction you're intending it to go into. So you're looking for proof. Let's look here. We've got this high here, and it's going to revolve a lot around SR. Okay, that high there. So if I zoom in, okay, we've identified everything else. Resistance, resistance, okay. Remember the template I showed you, okay? Resistance. Now you could say, well, low, high, higher, low. If it was that easy, everybody would be clear with breaks and structure. Sometimes it's not that easy. So this is where we're within a dealing range right now, which is this here. When it breaks out of one dealing range, it enters another one. So where are we targeting? Where's market most likely to go? Well, it's capped between that range high there. So most likely, if it's going to push up, short-term target's going to be there, because this is where the move initiated from. Then the liquidity is going to be resting towards the range high, and we got liquidity stops resting there. Okay, so how do we get there? How do we enter? At which point do I see the breaking market structure? Well, if it's broken out of one range, okay, pushed up, resistance, broken above it, come back below it, I want to see the impulse move away from it. There we've got the impulse move here. Okay, there we have it there. So now when you pull back, it's going to be entry now. We've broken out of the range. We've broken this structure here. Okay, we're creating new structure. So now we can bring in the higher highs, and then the higher highs and higher lows make sense. So if you've done that, this was the down move, okay, that pushed the market up. So you would enter long there. Then what is the down move that caused it to break above it? It was this down move cause a displacement, move away from this dealing range. Okay, coupled with whatever I've told you already. Then where's your entry? Your entries are retesting there, so you can then smack it long there. Stop loss there. Why? Because if this is the down move that pushed it above it, okay, then we expect higher highs and higher lows. Okay, so we've got there like this, higher highs and higher lows. Then it makes sense because we understand we've broken out of this structure there, this dealing range. There's your entry, there's your risk. You're working towards the top side of the range, okay? Target 1 obviously there, then target 2 there. Whatever happens after that happens after that. That's the first example, okay? Again, it does look like the template. It's not going to look 100% perfect. Don't think it has to look 100% perfect, like exactly like the template. So if I mark this out, okay, like this, support, support, does it not look like this example here? For example, let's remind ourselves. Back above it, there's that trading, okay? Deviates it, then back above it, and then there. Exactly the same thing. It's not going to look 100%, but you're looking for something similar to this, okay? So now when this happens, rally above, we know where we're wrong there, okay? We're wrong there, entry there, we know where it wants to go. Okay, now when you're more advanced, you can probably get in earlier. For example, say you can start using different structures. For example, this is probably in part 2, where I need to know if people understand this first, where you can start using more structure. But that's a high there, that's a deviation, below it, above it, below it, and then when you see something like this, a stop run, and that is a breaking mark structure, but that's a different type, more advanced. I would call it more advanced. Okay, if you know it, great. Then there's your risk, there's your target, but we're going to be on about that later. For now, I'm just going to mark out the clear cut, most hindsight of all setups, okay, but it's clear cut, just so you know exactly. At least you have one template that you can use solidly, okay, with full on confidence behind it. Okay, and like I said, this is nothing new. This is shit we've done before. So that's example 1. Okay, let's go on to the other example. Okay, the other example I want to show is how we can use classical chart patterns. So within this example I'm going to give you, this was a long we took previously and we took a loss on. Okay, so this was the down, we pushed the market up and we went for longs around here and we got stopped there. That's fine. So let's identify a range we're in, or stop levels. So we can see we've got this high here, and let's mark that out. Okay, there. Now, okay, we're coming to key resistance. Okay, where would be the objective? The objective would be at this point, if I go to the 4-hour, okay, these lows here. Okay, so we identify where do we want to go. Now let's look at this. how do we enter, or how do we see this as a breaking market structure? Now this is a different type of looking at breaking market structure. Okay, it's looking at it differently, and then you're identifying, okay, um, how the higher highs and higher lows, because everybody's used to higher highs and higher lows, which is fine, which is the case. So we're into resistance. Okay, we look for some structure now. Okay, oopsie day, sorry, 1 second, it's all over the place. Think on one of his own. Okay, let's look at this now. That's the key resistance. Okay, so, and then we've also taken out this liquidity there. So I'm going to break this down now. What we've got here is that high there. Okay, there, deviated it back above it. Now anybody taking this would say, well, that's a low. Okay, and that there. My job is to try draw something out that would make it, give it more confidence. In this example, we can see like a wedge or trend line thing there. Okay, now let's look at this. Basically, we're into resistance, we're looking for an excuse to enter, we're looking to identify where we're wrong. This, a break of this is what? A break of structure. Okay, it's a break of structure. We've got the stop run, there's that breakdown, so you can even enter here or pull back, that's up to you. What have we identified? We've identified where we're wrong, we identify where you should go, okay, towards there, at least short term there, and then there. So this is using a basic trend line as a breaking market structure. Okay, as soon as we broke down, made a lower low, this was the low that pushed the market up. As soon as we broke that, that then told us that's where we're wrong now. That is market telling you I'm ready to go lower. I've done my manipulation, I've done the stop run into the level, key level, I've broken down, there's that breakdown, a break of this trend line. Okay, now I'm ready to go. Then the higher highs and higher lows, or lower highs and lower lows, make sense. Okay, we've got that. Okay, something like this there, so you can see lower highs and lower lows breakdown basically. Then it makes sense, but just by throwing this in, it's a simple example. Okay, so this is another type of way of using it. Okay, let's look at another example now. So this is the trade we went over on Friday. Okay, if we look, we're into this daily block here. Okay, what is that? That's identifying we're into a key level. Okay, now let's break this down further, and this is where deviations within the ranges. Okay, and this is where it just takes practice to spot them. I can say this all, till I'm blue in the face, but you have to be practicing this. Okay, so let's look at it from this point of view. So if we look at this right now, okay, what do we have? Where was the long taken? I marked out the long scenario here. Okay, what was I waiting for? Again, let's break this down structurally. So that's the key high time frame level there. Okay, this black line there, which is the daily block. Now let's look at this. If we look at this carefully, okay, what do we have here? Initially in the day, this was the run up. Okay, that was the run up. So let's mark out a range high. Okay, there. And this was the range low. So the setup unfolded that we got was in New York or late in the day. Okay, there. So we took out the low of the day into this consolidation here. Okay, took out the low into the key level within, okay, that daily block. Then we started to push up. Okay, so if you did not enter here, that's fine. We've got a rally above. Okay, there. Now I said in the video I initially ideally come into here. Now this, I'm not going to talk about this entry, that's a whole different thing. Okay, we can argue. If you're more advanced, you can start saying yes, because we've seen this impulse move here, get on board. I want the clear-cut scenario that none of us argue with. Okay, initially in the morning, what was the range that we couldn't get above or acting as a pivot? It was this high here. So if I drag this along across, okay, let's observe the price behavior around it. Resistance, deviation back below it, deviation back below it, resistance, clean break above it, holds it. In the session I said, okay, I want to see this low hold, but the way euro was looking, looked like it wanted to push lower, the dollar looked like it wanted to push higher, probability isn't as high. Where are we completely wrong here? So unless you're willing to use a stop loss below there, that's where you would step in. But we're not interested in that entry. What are we interested in? We'll see if we can get a move down to there. If we get it, then we enter. Now let's look at this. Remember that structure? This is a different way of looking at it. Deviation, back above it, up. Just look at this now. Got this there, this there. Use that same SR level. This is the pivot there. It deviates it, gets back above it, There's that long. Now, what was the down move that caused that? It was this. Okay, this was the down move that caused it. So we avoided the entry there. We want more confidence to enter it. We're gonna wait for a move back above the range. There's our entry. Our risk is there. Why is our risk there? Because if it gets back below this black line here, that means it's going back below the range level or the pivot. It's no good then. So here we can enter and then risk there, push up. Now if you want to take it further, we can say, well, we've also got, if we look carefully, if you didn't want to enter there, we've got this low here. If I drag that across, okay, it's another example of this. How? Consolidation, back below it. As soon as it gets back above it, you could enter there then, okay? So, it's a template, like I said. It's clear cut that if this does not hold this low, we're back above the range level, we're most likely wrong. Are we getting higher highs and higher lows? Yes, we are. Low, a high, higher low, higher high, higher low, higher high, higher low. Then the higher highs and higher lows make sense. Okay? But we're using the ranges, okay? We're using the ranges to get clear cut. Then higher highs and high lows don't really matter. This is just the way I see things clearly. And if you think this may help you, fair play, go ahead and use it. But using the ranges, okay, we're identifying the moment is ready to expand. This is that impulse move, then down, but it's reclaimed this, which tells us that this is a deviation, okay, coupled with the high time frame stuff I've been on about. Then there's your high probability entry. I'm not saying these aren't high probability, but the clear cut way, okay, that I want you to, at least learn the basic would be there, risk there, okay, then higher up it goes, okay. Do you have targets to reach for? Well, we did speak about having a target there, and then obviously higher up would have been well, if I look on the 15-minute, we spoke about this in the live session anyway. So our ultimate aim for this level there, okay. But yeah, the main structure isn't the target, is mainly going for entry. I will see in the breaking mark structure. That's another example. Let's move on now to Euro USD. Okay, again, remember the template. I'm gonna keep repeating it, and I'll keep repeating it till you're fucking sick of it. This is the template. Okay, below it, as soon as I get back above it, there's our entry. Structure deviates away from it into a key level. As soon as it gets back above it, that's ready and reclaim, holds it, then we're going above it. It's the same fucking thing. So let's look at this example here. It comes down, takes out a low. Okay, that's a range low. What is the market capped within? It's capped within this high here. Okay, there. Now initially we get this consolidation here, deviates it back above it. Hindsight, that looks perfect. Okay, fuck that. We're not even on board that. We look for the clear cut setup. Just so happen that's the Monday's high. Okay, so intra-week, if it's going to push up higher, where's going to be the magnet? Short term, the magnet is going to be this high here and fill in this. Ultimately, intra-week, the stops are going to be resting there. So this is a deviation. This is a deviation. Okay, and this little thing here, we want to know clearly when it's ready to break out of the range. This is the range. These are deviations, neutralizing both sides of the market, but it's going to have a clear displacement away. At which point does it have the clear displacement? Not here, because it gets above it, immediately back down. Not here, above it, back down. Above it, back down. It's this. And around the retest, then it's telling us it's ready. So what caused it to go above that? It was this down move. Okay? This was the down move that caused it to go above or break out or displace or cause a displacement away from the dealing range here. Okay, at that point, whatever the entry is, as long as this low holds, that's our invalidation of it. So we identified where we're wrong, which is here. So how could you enter this then? Well, you could enter, okay, as soon as something like this happens, well, we can draw more SR levels, okay, shorter term SR levels. We've got this level there then, okay. So then you can just refine it even more, okay? So that's a resistance broken above it, and you pull back. See that spike high there? That could have been your entry. As long as this low holds, it doesn't matter where. 15-point stop. Where are we targeting? Just going for examples, okay? Targeting there, 40 pips, okay? Done. Another way of doing it, to just refine it further, is we've set a new range. So if you look at that, you got this low there. That's if you miss that, okay? So let's just do this. If you miss that, then we got a little run here and then pushes up above it, okay? Then you could enter on a bullish candle there, but where you're wrong there, okay? And it's as simple as that. You want to refine it even further, form another range, resistance, deviation back below it, range low, deviation. As soon as it pops back above it, as soon as it gets back above that high, if your stop loss was there, you can then drop your stop loss there. Why? This is a dealing range. We've done this deviation there, deviation there. If it's going to break that high, that means it's breaking out of the dealing range. You reduce the risk, and then whatever the target is there. Okay, so where's the entry? There, risk there. Okay, there's that breaking market structure now you want to throw in the higher highs and the higher low, high, higher low, higher high. Well, whatever the pullback is, as long as we maintain a higher low, that's your risk. So see how when you identify the range you're in, then the higher highs and higher lows make sense. Whereas if you don't do that, personally, if I didn't do this, I would struggle with that, because then I get too into it and say, well, there's a high low there, this, that. No. We're identifying the structure. We're in this. Until we get a clean displacement away, we're not going to expand. Consolidation leads to expansion. Consolidation, yes, we got the linear deviation, but clean breakout, then expansion towards the target. Okay, and that's it. Keep it as simple as that. Okay. Now let's look at another example. Okay, again, this was on Friday, and I spoke about this is actually in the New York live session video, okay, that we did on Friday. So we spoke about, okay, this was the range low at the time, the macro range low. Regardless, it's a key high time frame level here. Okay, go watch that if you missed it. Okay, there, that's the support level. Okay, and we've taken out, key liquidity here, these lows here, and these lows here. Now let's refine it now. Okay, we're just focusing on what the breaking market structure. We're not here to analyze the whole fucking thing. We're just looking at the breaking market structure. That's it. Okay, let's look at this. We've taken out this low here. Okay, there. Now if you're aggressive, we're leaving that. Okay, ignore that. We're looking for the clear cut entry. Where would I have the confidence or the balls to enter this? Okay, now let's look at this. If we look, this was the consolidation that pushed the market down. Resistance. Okay, do we have a range? We have a layer dealing range here. Okay, well, here, this consolidation and that consolidation. Okay, now market was here at the time in the New York session. I said I want to see bullish price action here. Okay, to confirm it. Well, let's look at this. Let's break it down further now. Look, I'm not gonna blindly buy this. Yes, I'd say, well, this thing validation level. I'm not having a wide stop like that. I want tighter. Okay, here's it comes. You see this here? Early in the day, that was a low. That was the low. Again, I'm gonna draw that structure out again, just to piss everybody off. Here, only joking. Down, back above it. There. Look what we're getting here now. It's the range low. Down, back above it. Here, okay. But there's not much structure there. At the time, the dealing range that led to the new low was here, so we can anticipate and move back down into here. But look what it does. It deviates it once more. But once it's touched that, what are you looking for? You're looking for to get it back above that level. The moment it does that, that's when your entry is. Okay. Reason why we wouldn't enter here, okay, is because this was the last consolidation that pushed the market down. Then it acted as a resistance there. Then it broke out. Okay. If this here was up here at the time, then I could have a tighter stop. But no. So this told me, okay, even though it's finding a bit of support there, most likely it's going to want to push lower. Why? Think of it was buying, selling here to push the market down. Then find resistance, push the market down. Then right above it, resistance should act as support. Previous small dealing range. Now, again, the same structure here. Okay. Again, it's the same thing here, really. That's that low, support, deviation, back above it, there. So, where's your entry? Your entry is then there. So instead of having a stop loss there, you've only got a stop loss there now. Do we want higher highs and higher low? Let's come to our key support level there. Low, high, higher low. Even if it's a lower high, that's lower low, that's fine. What we look for, that breaking mark structure. Okay, there we have it. Establish support there. You buy along there. At the same time, it is higher highs and higher lows. Okay, so it's, see how now it's easy to see the higher highs and high lows because we've identified it's back within the range. Okay, so these are clear cut scenarios. You need to practice this. You need to go back, practice this. Okay, there's no point giving 100 examples. I'm giving you, the clear cut ones. Okay, let's give another one. Aussie dollar. This is another trade we took. Okay, the aim of the video is to make a collection of these types of setups. Okay, so oops a daisy, I've lost it again. Okay, so this was a trade we took previously. So previously, okay, we spoke about this being the range low. Okay, here. Okay, deviated it, support, and then this consolidation let it move down. Above it, we're looking for support there. So let's mark that out. Okay, and the trade was around here. Okay, we had a run of these lows which further supports and then move up. Okay, happy days. Let's break down the actual trade now. Okay, now where did we take the trade? Well, let's get down to it now. It was down here. So what did we have? So I'm just gonna get rid of this for now, so there's not too much clogging up on this chart. And get rid of this. So I've just explained the higher time frame reasoning for it. Let's go down to the lower time frame. Okay, let's get down to it. Low. Okay, there. Now let's look at this. Sometimes it's not gonna be black and white, but you want to see the key pivotal areas. So that's, we've got a deviation there. Okay, and then what's the high? The high is here. Okay, so short term, what's the short term range mark is capped within? Well, what proves that range high? Let's mark that neatly. Is, well, that proves it there. This proves it here. Okay, now let's look. Then we're looking for our pattern. Again, we have it here. It's not the best, but it is something. Consolidation. We've identified that we are at a key level. Deviation. Back above it. There. So what led it? It was this down move, push the market above it. You can, if you didn't buy on a retest there, okay, your risk will be there at that point where you're going towards that range high there. At least after that, we'll deal with it. What if you didn't get on board there? Fuck it, let's go along with it. We got that low there. Let's mark that out, and we can refine this a bit more down. Okay, so we've got that there. Let's look. This is a bigger version of it now. Consolidation, deviation, breakout. This was the down move that took it back above there. Okay, so entry there, risk there, working towards the range high there, and then we did have a target previously, if you remember, targeting. It was this level here. Why is a bit of a void to fill in, and these stops there. If it went higher, that's fine. But can you see? It's about the ranges now. One break of one range, enter the new range. A break of one range, enter the new range. Okay, this was it's like fractals. Fractal. There. Consolidation. Deviation. Back over. It's a bit like head and shoulders, but it's not just head and shoulders. It's about looking at the price action around it. Okay, so here's the risk. This was the downwind that pushed the market up. Now we can. There was even the trade actually we took was around here. If we look at this, it was, see this here. It was even better than that. It was here. Okay, we had resistance. So this is like ranges within the actual range. That's up to you how you want to take it then. Okay, let's get rid of this. So we're just focusing on one. Let's get rid of this too. Okay, the actual trade we took. Okay, this was another one. A range high was capping the market. Is this okay? And actually, let's get rid of this as well. I want to mark out short-term range. So I love it. You'll find I love overlapping as well. Got that there. I could narrow that down to just mark up more extreme points. Okay, it's here. Okay, what's capping the market to the downside is this. What's capping the market to the upside is this. Well, we want to see a clean displacement away. So it breaks above it. Okay, there. But we got that to level. Okay, you could enter there, but the risk would probably have to be there. Okay, I mean you could go for it there. That's fine as well. But that's not something I'm comfortable with. And I wouldn't have taken this because it's in I'm gonna be asleep at that point. Okay, new session starts, new ranges. Okay, but we know that this SR level is the key pivotal SR level, and we want it to hold above that. If it does get back below that, we want to be quick lived. Okay, now where's the entry? We took it here. Now if I break this down, this is a smaller version. We know that okay, it's done. It's come down. It's coming to this block here. It's done the manipulation, and then it's pushed back above, and it's staying above that. So if it's already done the manipulation here, or the stop run of this, it shouldn't really go back below here now. So if I wanted to enter, as long as this low holds now, once this happened, that once we push back above this high here, that's that invalidation level. So this is just getting a bit more deeper into it. Okay. Now that London unfolds, where's the London session? It's around here. Okay, so you will obviously enter in session times because that's when the market is most likely to move. Okay, so that's the start of the London session here. Okay, now let's look. We're looking for the exact same thing. It's beautiful in this example. Let's mark this out there. Let's get rid of this for now. Sit daisy. There. Okay. What do we have? Now this ain't looking exactly the same, but it's, I would say this is more advanced in the sense because it doesn't look exactly like the template. But you'll get a start to get a knack for it after a while. We've got this there. Okay, just drag that across. We can see that's supported by SR there. Okay, now consolidation. There's that deviation. But once it gets back above here, look at the wicks, the bodies. It can't close below there. Okay, so again within that we say, oh, I don't have the balls to enter it here. Do I place a stop loss there? The moment you start guessing that, fuck it off. Okay, you wait for more confirmation. You wait for another dealing range to form. Let's break this down further now. Okay, now what's been pivotal around here? If I look at the bodies here, see this there, there. I want you to focus on the bodies. Okay, this is just getting more advanced into it. This is a range set or consolidation set. Okay, there. We got support there. How's that support? Because it pushed the market up. It deviated there. It found resistance there. Pushed above it, held it. Resistance there. What we want to see, a clean displacement. This is where you can even throw in a basic chart pattern. Yeah, there. It's broken above this again. It's broken over the trend line. At this point here, we weren't confident, okay? But it did fit the plan. I just want that further confirmation, okay? There's that further confirmation within session time. Long there, risk there, and it pushes forward, okay? Obviously, it's a small time frame chart, so you gotta keep it, within, whatever. And obviously, this was the example of the, yeah, and that's it. It's as simple as that, okay? That's that. Let's do one or two more examples, okay? Let's do dollar CAD. This may look a bit different now, okay? This dollar CAD. So, dollar CAD, let's go to the daily, okay? So here, we're into this key daily SR level here. So we just first identify the key SR level. So we've got so resistance, 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 support, support, rally, come back into it. Now, let's just get rid of that. Let's just focus on this. Let's get back into it now. So what do we have here? The exact same thing again. We identified. Okay, there. Template. Okay, there. Consolidation. Break below it. Resistance. Now, what was the low or the downward that pushed it above that? It was here. Now this falls back into the Euro USD example I gave you. Okay, it looks similar. Now at this point, why wouldn't I be confident to buy it long? Because this was the downward that pushed it up. It hadn't retested it. If this was right under there, then I would. But look what it does. So then we look for a double break. If you want to call it a double break, okay, or double confirmation in that sense. Let it do its thing. Most likely it's going to come back below that. But then it continues, and look what it does. It gets back above it then. Okay? At that point, we look for it. Now, ideally, you would have wanted to come into there. Okay, so at this point, it broke and closed above it. It retested there. But if you didn't get on board there, you've already got invalidation level. Okay, because once it gets back above it and makes a clean move away above it like this, you can get on board there. Or you've missed it because you're waiting for that. But what do we have? The clear-cut thing is we've got an invalidation level, which is this low here. So at that point, when you're not too bothered about the entry, you can enter there and then there. But let's, for example, say, we didn't enter this, because sometimes that's going to happen. You're not going to get the entry you want. I've got a limit order there, for example. Well, I ain't going to get it because you didn't touch it. But if you're the type where you say, I'll start scaling in, because do you have reason to scale in earlier? Let's go to the lower time frame and see if you've got reason. Well, we do, because on the lower time frame, you will be able to see it's retested it on the 15 minute. So at that point, you'll say, okay, I can enter here then. Okay, as long as this low holds, I can enter there. Okay, this is where it comes to practice. Go to the lower time frame, you check it out. All I can give you is the basic template. Where are we wrong? How we use the ranges. The rest is up to you just to practice it. Okay, let's go for the final example. Okay, let's look at this now. So the dollar CAD again. We've had a move up. Okay, above here. Key run into key height on daily block, whatever. Okay, but let's look for our breaking market structure now. Now, what do we have here? So what was the range set? It was, okay, we had a range high for the day. We took that out by like a couple of pipettes or whatever. Okay, regardless, we took that high out. Okay, then we broke down. What was the low of the market? It was here. Okay, now there's, you could say, well, I could enter a break of this. Okay, let's say this is an example we want to go with. We want something really crystal clear. Okay, we want something, yeah, that's it. You know what, this is it for me. Okay, so what do we do then? Sometimes they ain't gonna come into there, because you can say, well, this is a pivot, and hindsight is gonna look perfect now. See that they're down, we push the market. We're not looking for this sort of setup. Okay, we've got a clean setup that we want to work for. This sort of setups here will be in part two, where you won't even need a part two, but if you want a part two, if everybody gets this, then we can do a part two later on. Okay, but we got a new range set. Okay, got that high there. Okay, we can do that, but a new dealing range set, and we've got this low here. Okay, at the time. So if we drag that across, okay, what does it do? This is a different type consolidation here. Break below it. But when you retest it, I say, okay, I want to see bearish price action. What do I want to see? I want to see a breakdown. What does it do? It deviates back within the range. Up, below it. Up again. Okay, wicks it. But it's not clean breakdown. At which point does it break it? Then we look for more further dealing ranges. Go down lower, and then I can see a further dealing range in the lower time frame. Okay, it's coming to the block. We forget blocks for now. Okay, we look for just ranges. There. Let's get rid of this for a second. Okay, and then there. Okay, now what's that further breakdown? Okay, the initial breakdown was, so I'm gonna box this out. Okay, so that's the one range. Okay, um, say range low, range high. Okay, then we break it, but then we're waiting for further breakdown. At this point I'm thinking, okay, do I enter? I don't know, I don't want to enter here, I'm not confident enough. Well, what do? I let it form a range, a secondary range. When it breaks that secondary range, that's that breakdown from the initial range then. Okay, that's double breakdown, if you want to call it that, whatever term you want to do. Okay, the secondary range is within the initial range, is the grey box. The secondary range formed is the retest. Then when it breaks down, so it's made one attempt below it, go back above it. Second attempt below it. Once it makes that clean break and stays below it, there you can enter. Where's your risk then? It's there. Why? Because we've already done the manipulation there, and we don't want it to enter the secondary range we've drawn out. Okay, so then it's up to you how you want to enter. Whether it's, because it's going to break for the second time like this, then most likely we've got a clean violation level, and if it goes back above that, we're wrong. So then you look at the higher highs and high lows. We've got the deviation there, but at the same time there's a high, that's a low, that's a lower low compared to that, lower high, lower low. Then the lower lows and lower highs make sense. Why? Because we can see clearly the dealing ranges. Okay, and then we enter. So then you can say, well, I can enter in the retest there. That's up to you then. I'm giving you the bare minimum. I'm giving you how to identify the invalidation level, and then target wise, does it have reason to go lower? Well, yes, it fucking does. At this point, okay, the reasoning was, oh come on, was to fill in this. Okay, just a short term. Rest is up to you. Okay, but take out this low into there. After that, you can rally 1,000 pips after that. But we've identified the top down breakdown. Okay, of the reasoning behind it. So I hope this helped. I'd like your feedback on this. Okay, part two will be more advanced ways of looking at it, in the sense where it doesn't look as clear. When things don't look as clear, how do we do that? An example would be, I'm going to give you a brief example, is where we can use the breaks, the ranges as reversal patterns or pattern failures to see breaks in market structure. Okay, in the sense where, okay, I spoke about some live session consolidation, deviation, and I said previously if it breaks below that, well, if they were buying within here, okay, that's a breakdown or a break in market structure. That's where we enter. Did we get that? No. What did it do? It came below it, came here to the range low. It got back above it, okay, and then this is a smaller range again, using coupled with that range low, range high. But look what it's done. It's gone back above the initial range. So before this smaller range is broken, we can get on board because of this in this range that was set initially. There's that breaking market structure there. As soon as it gets back above the old range, that's an entry, stop, rally. But that's a more advanced way. That's going to be in part two. But I want you to all know the basics from part one. Okay. So I hope that helped, and let's see how it goes.